Alpha earning just blow everything away, and the projected number is going to shock you because this stock can become an $8 stock or a $100 stock. What's up, homie? This is Howie. I'm a principal AI engineer with a PhD in physics. Welcome back to Howieverse, where investing is driven by data. Alpha stock just reported earnings. There are some good news and there are some bad news. If you just read the headline, they're mainly good ones. However, investors are actually pricing in for bad news, which weren't talked about anywhere. And that's why you're here, and let's get to it. Let's talk about price action. First, what we see right here, the Alpha stock actually trading at $53, and we have this $50 level. And during the earnings week, it actually hasn't broken that yet. So that is a really good news from a technical point of view. And also, if this $50 level is being broken, then there's more bad news or the more downside for the stock to go. And let's look at the earnings real quick. For the earnings, the surprise on the earnings is 8 to 9%, and for the revenue is 6.2%. So they beat in both revenue and earnings. However, if the stock can go lower, where that's it going to go? So the first level that I have right here is this upsloping trend line, where it's gonna go all the way to this $44 level. If it's dropped even more, there are a lot of resistance over here as well at $33. Hopefully it doesn't go there. However, from the business side, which we're going to talk about soon, it actually do not refer the stock is going to go down that much yet, right? So overall, good news for the technical point of view, because the price action over here, as you can see, this is actually hold up this $50 level. It actually go down to that level, right? So before the earnings, I put up a YouTube video that is talking about this $50 level, and I was really confident that it is going to hit this $50. And if you look at it, right, so a few days before the earnings, like maybe on Wednesday, it actually hit this $50 level. And my YouTube videos actually came out on like around here, like Tuesday or Monday or something like that, right? So at the time, it was trading at $55, and it actually touched this $50 level, because this $50 level is just acting like a magnet that just once you get close to it, it want to yank you down to that level, and then you can bounce from there, right? So that is actually a very strong magnet before it can bounce even further. So good news, because the investors actually pricing in that, hey, in this report, in this earning report, you actually beat revenue and also the EPS. However, this is what we expected. That's why your stock just worth $50 from here, right? Which is at this level. So let's look at the business, okay? So if we look at the financial, if we just go look at the growth and profitability over here, so the revenue compared to the 2024 revenue actually go up by a substantial amount. However, if you look at the net income over here, it's only $26 million in 2025 versus $112 million. So there is a huge compression in the net income. And if you just look at the chart like this, it's not going to tell you the whole story, because the net margin over here is almost at 9%, and over here is only at 1.6%, which is shameful, right? However, we're going to look at the number more closely. Let's do it. First, let's look at their balance sheet. They actually have $685 million in cash and inventory, and the inventory is up 17.6%. which is very good because they're expecting to sell more stuff, means the business is expanding. And if you look at the current liability over here at $336 million, they have twice as much cash as the current liability, and the business is doing okay in today and the current year, right? Nevertheless, I give this a B minus balance sheet because they have a very big long-term debt here. Is due to the road acquisition, And yeah, they have been paying it off, but they only pay off $7 million in 3 months. Next one is the income statement. What they have here is the revenue is up by 24.6%, which is really good. This is phenomenal. However, the cost of sales is at 26.8%. That means like if your business scale, if you expand your business, you actually lose more money. And this is actually not, they have a scalability issue, right? Nevertheless, this could be due to the tariff, right? If I get rid of the tariff, the cost of sale is actually expanding only 13.6%, which is really good. So I don't have a good read of what it is actually, but we're going to monitor it next quarter. Next one is the SG&A. SG&A over here grew up for like 32%. That is really bad. They're spending a lot of money in marketing. This is probably due to the Australia expansion, and they need to spend money in the marketing since its first launch. And I would expect the SG&A to be elevated in the next couple quarters because they have the EU expansion coming up. So if they expand in Europe, that means they are going to spend more money in marketing as well in that point of view. So this is going to be elevated or even more. So something needs to be aware of. At this point, income doesn't matter because they have a very big debt, big long-term debt. So what I mean is that even if they earn zero income, as long as they pay off their debt, meaning that their free cash flow is fat, and that is actually forgivable. I'm actually going through the extreme where they don't earn any income at all because they're paying off debt, but at least you get my point. The free cash flow is more relevant than the net income. Okay, I talk about the free cash flow. This has actually got me really excited, right? So the free cash flow is at 190 million, and that is 65% increase or grow from the fiscal year of 2025, which is at 115 million. Okay. One thing that I don't like here is the stock-based compensation expand is 2x in 2 years, where you see in 2024 is 40 mil, and here is 80 mil plus. In addition, for the total long-term debt, right now is at 4x free cash flow, which is not ideal. I would like that to get lower, maybe like 2x. That would be ideal. However, it's been going down from the previous quarter when they reported it was 5 to 6x, right? Now it's 4x. So this is actually improving, but it's still high. All right, next one, let's talk about Rode acquisition here. So this is the section of the business that I think is worth mentioning because Rode has been growing exponentially for the company, and this is actually the main driver for the company growth. Okay, so growth, since they acquire it, they gain almost $300 million in sales and $112 or $113 million in net income. That is a really high 38% net margin. That is really good. They are selling all this stuff that has higher margin because e.l.f. has been considered or has been known as a cheap cosmetics, but they have this new aspect of business that can sell at higher margin. All right, let's talk about the future. Let's talk about the outlook. $140 million is expected in the first 4 months, or $420 million for the full year. This is only for Rode, okay? That is 43% of annualized growth. And all of this number is before the EU launch or the European launch. I'm not surprised if the total annual sales from Rode itself is $550 million. That is because they are going to capture that Christmas revenue, right? That is the EU launch in the fall, and that is equal to $1.89 billion, assuming there's no growth in the core e.l.f. Okay, the company forecasts only about 9%, And only from Road itself, that is 15.7% annualized growth. Okay. The company forecast is kind of underwhelming when I hear the earnings, right? When I listen to the earnings call, and at 12 to 14% is very underwhelming. However, this company has been known as sandbagging their numbers, meaning that they will set up the low expectation and then beat it afterwards, right? And my forecast, assuming 4% of core business growth, so the total revenue is going to be $1.95 billion or 19% annualized growth. This is actually decelerating. If you look at the growth from 2025 to 2026, it was about 25%. This is at 19%. It's kind of like underwhelming to me, but my projection can be wrong. There's actually a few downside here that is very, very dangerous, right? Road has not been fully paying off. And also the balance sheet here, like I said, I give it B minus because of the because of the inventory and the cash they have in hand. But it actually, the balance sheet leaves no room for error. And Bieber personal branding risk, if they decided want to take vacation, or they she's having baby, or I'm just speculating here, or they don't want to work with Elf anymore, then that is a real risk. And for the core, Elf is structurally weakening and tariff is still uncertain. So this is definitely high risk, high reward stock where it can go all the way to $8 from this point and $100. Okay. Okay, here's actually my take. Okay, 70% probability of the stock being up 2x and 30% probability something breaks. That means going to $8. Why do I put 70%? Road demand is actually real. Okay, they almost make $300 million in just 8 months, and they were ranked number 1 at Sephora in North America, Sephora UK, and Mecca in Australia simultaneously. So that's 80% growth, and the EU launch was not yet contributing, right? And Road hit number 1 at Sephora essentially immediately after launch. So the hype is real, okay, because of this personal branding. And mind you, EU has 4x of the population of the UK. However, they don't all speak English. That could be the downside. But if you take 50% of the conversion, that means 2x of UK population. That is still a really big chunk, right? And Sephora actually a very strong market presence in Europe in comparison to US and the UK. So that 50% or the 2x conversion versus the UK population is actually very, I would say, conservative, right? And that $550 million, if this EU launch is just twice as big as the UK launch, that is actually very, very conservative. In conclusion, the stock could be highly volatile from $8 to $100, and I'm not jumping up and down and putting all my money in one basket, right? It's not a financial advice. Nevertheless, I would like to monitor this stock and like to see if they actually improve, meaning that I need more evidence to deploy more money in this. Not financial advice, definitely. If you like analysis like this, please hit the like button. If you want more analysis like this, consider subscribing. I'll see you in the next one.